Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good weekend, all. Ira Epstein of Linn & Associates with your weekend financial update for this Friday, the 28th of July, 2017. Well, there's a bombshell at the end of the day. At the end of the day now, Reince Priebus is out as Chief of Staff at the White House, and General John Kelly has stepped in. So another big change. I mean, the changes are coming fast and furious, but why not? We're 6 months into it, and Donald Trump was famous for, you're fired, right? The Apprentice. Well, he brought in a staff of people that, I guess the performance hasn't been the best. I think you'd agree with that. I'm not saying the president's has been the best either, but he can't fire himself or won't fire himself. In any case, that's where you've got. One of the things that I wrote in my morning market letter to people was the fact that even with the break today, and I wrote this at 11:30, I said, this market does not act like a market that wants to break very much. And by the end of the day, the NASDAQ came back up, the Dow at new record highs. If this is the break in the S&P, it's not very impressive. And actually, the same has to be said of the Russell. So those markets look pretty good. In the VIX, we came back up a little bit, and that makes all the sense in the world, too, as the markets are trying to get their feet under them. Bonds and notes, they had a good rally by day's end. The dollar, again, got smashed as we saw big rallies hitting in the Canadian dollar. The euro took off to the upside. Fairly stable right now in the British pound. And the Japanese yen even came up nicely. And if you read the economic data on the yen, it looked pretty good. I'm going to stay with the Dow at this point. I want to because it's the strongest of everything. We might as well finish with it and let it take us the rest of this week up. This is the uptrend channel, an approximate one that I happen to see in the marketplace. And the market seems to be fitting in there very, very well. When we take a look at a weekly area chart of closes, because you broke down here and here, that was a down thrust. Now, from 20,414 to today's settlement to 21,775, you have not had a pattern on a week where you took out a previous week and created a pattern of lower highs and lower lows. Not one has taken place. When I come to just a weekly bar chart, I've also got two parallel lines right through here, and you can see how the week is going. Let's look at the weekly swing line. The pattern is bullish because you have a pattern of higher lows, higher highs. Higher lows, higher highs. Bullish unless you come back and take out 21,226. We are over the 18-week moving average of closes, which leaves the Bollinger Band right here as potential resistance. Guess what number? 21,849 is that number. We're still far away from it with a high of 21,784, so there's room there. What about momentum? Absolute locked-in bullish momentum. Hasn't given up a thing. So the longer-term charts, which we'll call the weekly, are still very bullish in this market and showing so far no sign of giving that up. The NASDAQ is all-time high. The market has not got as strong a pattern as the Dow because you have a pattern of a lower low and a higher high. No matter how I work that, that's not the same pattern. And while momentum is up, it is still not as locked in as you had on the Dow Jones, but still bullish. When we come to the S&P, the bias is certainly up. You're over the 18-week moving average of closes. Momentum locked in bullish, and the breaks in the market, even with that locked in, don't go anywhere. There's a common theme here. Take a look at the 18-week moving average of closes. The most you do is make a run at them. You did that here. You did it in the NASDAQ. You didn't do it in the S&P, or the Dow, rather, it was. And away you're going. So good action that I'm seeing in all those. In the Russell hit the 18-week average of closes and finished the week lower. So out of all the weeks lower, we're up in the S&P, we're down in the NASDAQ, and we're up in the Dow. And the Dow is the powerhouse with the 257-point gain. So there's your power. When we come to the VIX, and this is just a daily chart, I mentioned, if you're a subscriber or get into my morning videos, I said there's no reason for this market not to fail on the rally back up at the 100-day average of closes. And the rationale being that each time you've hit this lower Bollinger Band or made a run to it, that's where the market seems to be going, and it's where the market fails from, and it seems to going back to that 18-day moving average of closes. Momentum is turned up in this market, so I'm not really looking for this to come down and make a new low until you get back into this embedded or another bearish formation, more of a chop area. When we take a look at the 10-year note, you're at a very, very interesting point on the chart. Let me explain it. Right now, the pattern is lower highs, lower lows. But the chart setup is that if you take out 126, I think it's 17, that's the high of right here, you could end up with a pattern of higher lows and higher highs, which would again be bullish, and then you'd put the 127.08 area into question of, are you going to make a run for it? So what do the bears have to do? They have control of the market right now because you've got the lower high, lower low pattern. You finish, though, at 125.30. They lost control on a closing basis of the week because you're over that, and momentum is flat. This is a difficult chart. It's not giving you an idea of which way the pros want to take the market. In the dollar index, it's stanko time. You just keep breaking on down. You know, give the president some credit. He took office on January 20th, right? Take a look at the high and when this market made its highs. And one of the things he wanted to do was the dollar was overvalued. The dollar is going down. And you're going to get a lot of people saying if this dollar can close under this area here, there is no reason that a next count of 88 might be in the long-term pattern. I'm not saying it has to happen right here. I am saying that there's nothing bullish on this chart. Momentum locked into the downside. You've had a bearish crossover on long-term charts where the 18-week average of closes got under the 100-week, and the market is making new lows in that crossover. There's simply nothing bullish there, and the flip-flop is true in the euro. You have a pattern of higher lows, higher highs. You are riding the upper Bollinger Band, which is very bullish, and it's being accompanied by a locked-in bullish momentum. No reason for that market to say anything else. A newcomer to our charts this week, and by the way, that brings me to something. You know, during my daily charts, if you have a chart you want from time to time, if you write me about it and it's on futures, I will be happy to bring it up. Don't bring me the stock charts. When I hold my live webinars, and they'll start in the fall, I'll be happy to review that when I hold those. But for this, I'm just staying with my futures markets. Here you got a pattern, higher lows, higher highs. Now, be a bit cautious. The same theory in the Aussie dollar in terms of Bollinger Bands runs on weekly charts is that of daily charts. And you've now got 1 week, 2 weeks, I don't know about that third week. This week was also over it. So you got 3 weeks in a row where you are up and over the upper Bollinger Band. You typically don't stay more than 5% of the time over that. Even on a weekly chart, if I use my rule of thumb that each week is one of those percentage points, 2% chance going in that we'll stay over it by the end of the week. So be careful with that. I always pay attention to those numbers. Canadian dollar, look at this. 1, 2, 3, 4. I think it's 5 altogether that are over. This is the one I care about right here. Yeah, 1, 2, 3, 4, 5. Won't surprise me that when we open, this moves to the right-hand side next week of that upper Bollinger Band. Now, moving to the right-hand side does not mean you have to break much. It's different on this chart. You're so close to the upper Bollinger Band than you are far away from it in the Aussie. That's all I'm saying. You know, it's an observation. It doesn't mean I'm right. It doesn't. I'm just giving you observations. Notice how when you broke, you were falling apart here, and then you moved to the right-hand side in the end. So these are things you have to learn to observe yourself, too. In the end, the market has a pattern of a higher high and lower low, and on the weekly chart, you're caught. You're caught between, let's call it 87.98 to 90.60. And that's what I think you're staying in right now, just bouncing back and forth in that at this point. Crude oil market, I think now A watershed event has taken place on the weekly charts. You have the trend up, the bias is turned up over the 18-week moving average of closes, and momentum is up. Therefore, I think this break that carried the market down here to that 42.5 zone, I feel when I was on Fox and the other stations talking about this, that I was right in my analysis. I think the last show I'd said it on was Bloomberg. And by the way, I'm going to be on Bloomberg this Thursday again. I know they've invited me already. And that'll be about 9:10 in the morning Central Time on Thursday. But higher lows, higher highs over that. I'm friendly to this market. You might be going to the upper Bollinger Band, 53.5 over time. In the natural gas, all you keep doing is coming up to this 18-day average and failing. The trend in the market is still down. The bias is down. The momentum sort of locked in, bearish but oversold overall. Now, one of the things that I believe in are these pivot points if you're looking for in and out trading action during the day, or let's assume you want to get long and the market's not moving on you. Doesn't go where you want. One of the ways to move your buy or sell points up is to look to see where these pivot points are. Simply put, pivot points use the previous day's high, low, close. From there, there's a formula that they use, and it's very simple. We teach it to you to get 2 sell points against a midpoint, 2 buy points under it. And the formulas will look like this. Resistance level 1, which is sell point 1, sell point 2, buy point 1 and 2. And when you plot them on the chart, we show you how this all works out. You'll get 2 buy points. You're going to get 2 sell points and your median point. You tie it together, and it's a way to look at the market. And it's for a person that's looking for in and out trading, this is it. You don't use a regular bar chart, by the way, of daily. You start moving 5-minute or 15-minute bar charts, different ideas on that we present in there too. 2 videos to teach it to you. It's free, and I'm going to create a 3rd video tying a time element to it and giving you how momentum works with this, because it's a pretty cool tool. So you either call us at 866-973-2077. Leave your name and number. We're not going to be here over the weekend. You can always go to our website at www.iraepstein.com to do it. You can come right up here and just click on it at any point in time. If you're watching me on YouTube, you'll see an icon. Click that on. The forms will appear. Or right underneath us, it says, click here for Ira's free information. Do that, and you'll be able to fill out the form, and away you go. I'm Ira. You have yourself a great weekend. I'll see you in my other videos.